Yeah, so let's start with essay 300 now.
Not
Not
audible.
audible.
Hello. Yeah, let's start with essay 300.
Yes, sir.
Yeah, so let's start with essay 300, planning and audit of financial statement. So planning to fail is failing to plan. You must have heard this, right? Planning to fail is failing to plan. Very much relevant for you as well. Have you all planned? Everyone ready with your plan? Future course of action. So planning here is a continuous process and can come to you as a short note that planning is a continuous process. Please explain. So planning is not a discrete. Discrete means what? One which stops. Rather, it's a continuous process which goes on, carries on, and on and on. That means right after the audit stops and just before the audit begins, planning will be there. Planning will be there till the end of the audit and till again from the start of the audit. So it often begins shortly after the completion of the previous audit and continues until the completion of the current audit engagement. Planning, however, includes consideration of timing of certain activity. What the question can come is example they have given. Planning includes the need to consider. That means what? You will need to consider prior to any identification or assessment of ROMM. You need to consider such matters as these five matters. That means they are saying that planning includes consideration of timing of certain activities and audit procedures that needs to be implemented completed prior to the performance or further audit procedure. So planning, if I say, so like I said, RAP will be done and similarly you will be dealing with what? Further audit procedure. So completed prior to the performance of FAP. That means what? Planning will include certain terms of activities which will be completed prior to the further audit procedures. Example, planning will include the need to consider prior to the auditor's identification and assessment of the ROMM. That means before RAP, you in RAP you will do what? Identify and assess the ROMM, right? In risk assessment procedure, we do what? We identify inherent risk, we identify control risk, and together we identify what? Inherent risk plus control risk, together we identify ROMM. So they are saying before identification of this ROMM also you will be doing certain planning and dealing with certain matters such as, are you going to perform analytical procedure, or are you gonna understand the having the general understanding of the legal regulatory framework, laws and regulation applicable, and what about the entity, operation of the entity, its environment. Similarly, materiality, you have to assess how much materiality is there as per SA 320, whether you need to involve certain expert as per SA 620, and similarly further assessment, risk assessment procedure, the performance of other RAP. So if you want to see, this is SA 520, the materiality is SA 320, and expert is SA 620. So you can learn like this: 320, 320, 520, 620, line wise, 320, 520, 620. There is no 420 set standard as such. SA 420, there is no as such SA number. So you can line wise remember like this: 320, 520, 620, 320, 520, 620. 320 is with respect to materiality, 520 analytical procedure, and 620 involvement of experts. Similarly, other points will be obtaining of general understanding of law and regulation, legal regulatory framework, and lastly the performance of other RAP, risk assessment procedure. But more importantly, you need to understand what they are talking about. They are talking that before further audit procedure you will be dealing with certain activity. So even before risk assessment procedure, even before identification of ROMM, you will be including certain matters. You will be trying to identify and assess certain matters. What matters? Whether you need to apply analytical procedure, whether you need to involve the experts in your planning procedures, or you need to involve your or experts in your RAP FAP. What will be the materiality level that you will be considering, right? So all these points you will have to assess before identification of ROMM also. And this is what they are saying, that planning. Planning, however, consideration of the timing of certain activity. Now let's come to requirements of SA 300. So firstly, we will perform the preliminary engagement activity. That means right after the getting appointed as an auditor will perform certain preliminary engagement activity. Then planning activity will develop an audit strategy. So what do you think, which is broader, audit strategy is broader or audit plan is broader?
Audit plan, I think.
Audit plan is broader or strategy, or simply said without audit, simply say strategy versus audit.
So the strategy is broader.
Strategy is broader, right? Planning, we will bifurcate the strategy into various milestones, and to achieve each and every milestone, we will design our plan accordingly. We'll decide our plan. So strategy is broader, right? So we will first plan our strategy, develop our audit strategy, and then we will develop our audit plan by breaking the strategy into different milestones. And then lastly, we will execute, and further, lastly, we will do the documentation. So preliminary engagement activity, 3 points. Preliminary engagement activity. Just now we did. What were those 3 points, Krupali? Preliminary engagement activity. Do you remember? 2 points were from SA 220 and 1 point was from SA
210.
210.
100 essay 220, 210, understanding the terms of engagement.
Hmm.
Two were from 220.
2 points were there from 220. One was pretty easy. Before acceptance or continuance of audit engagement, what all procedures have you to perform as per SA 220? Have you performed those or not? Right?
Continuance of client relationship and
Acceptance and
ethical
continuance of client
requirements.
relationship, all the procedure that you need to perform as per SA 220, and one more was from SA 220.
Ethical requirements, compliance with ethical
Compliance
requirements.
with all the ethical requirement, including independence requirement,
Independence. Okay.
right?
Yes.
Now establishing audit strategy, Suneshwaran, what all points have we covered? Establishing audit strategy, what all factors that you will consider while deciding audit strategy?
Characteristics of the engagement like scope, uh, and communication like a reporting objective, where to communicate and when to communicate. The factors that are significant in directing engagement team's effect are
Hmm.
results of preliminary engagement and prior audit knowledge, which are relevant, and nature and time and the extent of resources required for the audit.
Perfect. Now after deciding the with the audit strategy, well, now develop what? Audit plan, development of audit plan. So we will develop an audit plan that will include a description of NTE of planned RAP. That means what? Plan development of audit plan will include risk assessment procedure, then development of further audit procedure, and then development of other audit procedure that you need to perform. So RAP ka NTE, FAP ka NTE, and then lastly other audit procedures, that any other audit procedure that you need to perform. So nature timing extent of planned RAP, nature timing extent of planned FAP, and other planned audit procedures that are required to be carried out so as that the engagement complies with the standards on audit. The auditor shall update and change the overall audit strategy and audit plan whenever necessary. So whenever you encounter any circumstances where you need to change your audit plan, where you need to change your audit plan, then you will have to change the audit plan accordingly based on whether you are changing your RAP, then you might have to again change your FAP as well. Or if you are changing only FAP, then you might not be required to change RAP. So based on accordingly, you might be required to change RAP or FAP or OAP, whatever. Now changes can be because of this changes. Auditor shall update and change the overall audit strategy and audit plan because of certain unexpected event, and because of certain changes in conditions or certain audit evidence that you obtain even further after deciding with the audit procedures. So in that case, you may need to be you may need to get yourself or get your audit procedures modified, right? An audit strategy particularly you may need to be modified. So if suppose audit strategy is modified, don't you think audit plan will also require to be modified, right? So in effect, it could also lead to change in audit plans as well. And when change in audit plan is there, then definitely it would lead to change in RAP, change in FAP, change in deciding of nature, timing, and extent of RAP, FAP, or other audit procedures. Now important note here is documentation of overall audit strategy. It's a record of key decisions. Important. Just mark this important as overall audit strategy is a record of key decisions considered necessary to properly plan the audit and to communicate significant matters to the engagement team. Similarly, audit plan is a record of planned NTE of RAP FAP. So what were included in plan, audit plan, RAP FAP, right? However, in audit strategy, what is all included in the overall audit strategy? When you are documenting the strategy, you will record what? You will record all the key decisions which you have considered necessary to properly plan the audit. So considering all the key decisions that you have considered for planning the audit, that you will record in audit strategy, and what is your RAP, what is your FAP, that you will record in your audit plan. That is how you are going to what? Document. And any changes you do in your RAP, FAP, or any changes you do in your overall audit strategy or changes in audit plan, that also needs to be documented accordingly. Now this standard specifically do not talks about initial audit engagement. For initial audit engagement, we have a separate standard which deals with SA 510. SA 510 which deals with initial audit engagement. But in planning any initial audit engagement, that means the audit engagement which was first time, initial audit engagement. Initial audit engagements are what? The audits are being done by the entity first time, audits first time and audit, or audits are repetitive. That means entity was getting their books of accounts audited, however it has come in our firm for the first time. So for our firm, first initial audit engagement could be either the entity is getting itself audited for the first time, or either the entity has come to us for the first time. That is what initial audit engagement. So if they have come to us for the first time, or it's their first time by which they are getting their books audited, then in that case, we need to assess certain additional audit procedure that we need to perform apart from preliminary engagement activity. So anyway we will be performing preliminary engagement activity, anyway we will be performing all the planning, everything else. But apart from that, in SA 300, while planning, we will also have to foresee, or we will also have to perform certain additional audit procedures. These are additional to what we were already performing. So for initial audit, additional matters the auditor may consider in establishing overall audit strategy and plan. Overall audit strategy and plan. What all additional matters you will consider? So arrangements with the predecessor auditor. That means what? You will have to comply with Schedule 1 Part 1 Clause 8, yes or no? Schedule 1 Part 1 Clause 8, communication with the previous auditor. These are the additional matters that you need to consider. Schedule 1 Part 1 Clause 8. Similarly, any major issues discussed with the management in connection with the initial selection as auditor, the communication of these matters to TCWG. Any major issue that you find, you can communicate with the management or TCWG. Similarly, SA 510, as I told you specifically, this deals with initial audit engagement. So definitely you have to foresee whether you will be able to complying with what? SA 510 or not. And then your SQC, standard on quality control and initial audit engagement, or whatever. Example, review of overall audit strategy by senior partner prior to commencement of the significant audit procedure. That is, prior to commencing the audit, you'll have to foresee the senior partner will check that for this initial audit engagement, since this is new to the firm, so not all the times that engagement team or engagement partner would be comfortable with any new industry or with any new entity or any new audit. So senior partner has to foresee that this audit procedure that we have to start, are we comfortable with this or not, or are this adequate enough or not? Clear? So 4 points are there. Schedule 1 Part 1 Clause 8. Any major issue that you encounter that you need to discuss it with management or TCWG. Similarly, third point was with respect to SA 510, and lastly with respect to SA 220 or SQC 1. Senior partner has to review. Now from here onward, they have included the same in study material. So I want you to go through this first and come with any doubts that you have. Try to go through this once and understand it by your own and come with any doubts. These are included in study mat, but that not, I don't believe it is that much important. So since it is already there in SM, so I have included again here. But just give a read, just give it a read, so that if at all a question comes, you are able to at least give at least 3, 4, 5 points. Okay. Now we will be starting with SA 315. Standard on Audit 315. Identifying and assessing the risk of material misstatement. What do you want to do in SA 315? You want to identify, and then you want to, after identification, you want to assess the risk of material misstatement through understanding the entity and its environment and related internal controls. So identifying and assessing the risk of material misstatement. The scope or the objective of this standard is to what? To identify and assess the ROMM, that is to identify and assess the inherent risk, and to identify and assess the what are the control risk. How are we gonna do that? We are gonna do that through understanding the entity and understanding its environment and understanding the related internal controls. Are we clear with the name, the scope, objective of the standard? Right? Identification and assessment of ROMM by understanding the entity, its internal control, and its environment. So, after understanding the entity and after understanding the environment, we'll be able to assess what? Inherent risk. Identify and assessing the inherent risk. And after assessing the related internal control, we'll be able to assess what? Control risk. And this together will form what? Risk of material misstatement. And that is what we have to do here, ROMM. That is what we are here to do. We are we have to do identify and assess the ROMM. Are we clear? So risk assessment procedure has certain components in the RAP or related activity. They have few components. What all components? Inquiry, analytical procedure, observation, and inspection. Any one of you able to relate this point to certain answer that you used to mug up a lot in your IPCC? Inquiry, analytical procedure, observation, and inspection. Yeah. Do you remember this answer? Methods to obtain audit evidence. How can you obtain audit evidence? Methods to obtain audit evidence. Methods to obtain audit evidence. So I used to recall this by using memory trick OICI. O for observation, I for inquiry, C for calculation or confirmation, A for analytical procedure, and I for inspection. Can you see the more or less the points are same? In risk assessment procedure also we are trying to do what? We are trying to identify and assess the ROMM. But how can we do? How after obtaining the audit evidences, right? So similarly, the points will be same, the components will be same. The what we used to do while obtaining audit evidence, we can either observe and then effectively see how is the inherent risk, what is the inherent risk, what is the control risk, or either we can do what? Inquire with the management or inquire with the employees of the entity, or either we can inspect, analytical procedure you can perform, right? So these are all what components of risk assessment procedure to identify and assess the ROMM. What all procedures that you will perform, components of RAP. Are we clear? So more or less these are same. If you can see, if you want to write, you can write, because this again we will come in essay 500, and there I will ask you this. You should be able to give me all the points in the answer. Essay 500, we'll see methods to obtain audit evidence. Everyone clear till now? Any doubt? Now let's identify and assess inherent risk. And I told you how do are we gonna assess inherent risk? By understanding the entity, by understanding its environment, by understanding the entity, by understanding its environment, including entity's internal control. So let's first assess entity and its environment. So how do you think? How are we gonna do that? Yes, environment of the entity. What is the entity about? Operating environment of the entity. Yeah, bolo bolo bolo. Try to come out with some point, at least one or two. Hmm?
Governing regulations.
Regulations of the entity, right? So I told you earlier also, suppose If I am covering a bank audit, if I am covering a bank, or if I am covering an insurance, then they are separately regulated by their regulatory authorities. If I am covering a listed entity, then separately are regulated by SEBI. So in that case, I'll understand that okay, if it is regulated entity, if it is a regulated entity, then more or less the inherent risk will be less as compared to unregulated entities. Clear, right? So I'll try to assess what all legal or regulatory requirements is applicable to the entity. Yes, any more points?
Nature of transactions, like
Nature of entity,
day-to-day
how
operations.
operations of the
Nature of
entity, right? What is the business model of the entity? Either is it cash, more or of cash business, or it is of more of banking channel business, right? So cash business, if it is more involved into cash business, then that there might be lot of inherent risk involved. Similarly, business nature of business is such that the more or it is of more into import export, then again inherent risk is more as compared to normal domestic business. So that is what they are saying. Relevant industry, you should see whether it belongs to, suppose example, let's suppose Geo. So Geo belongs to which industry? Telecom industry. Now regulatory is the try, and other external factors. What are other external factors are there? So I would say it is in a oligopoly market, right? So these are certain external factors that might affect Geo. Then nature of the entity. What is the entity's nature? Is its operations is into telephonic telecoms, right? Then ownership. Who is the owner? Is it Reliance? And then governance structure. What is the board of director structure? Audit committee, is it there? Any stakeholdership relationship committee, governance structure, are all the committees that is required, is it there or not? Similarly, the type of investment that it plans to make, and the way that the entity is structured, that is debt to equity, what is the ratio? How much is the debt to equity? Debt is zero, suppose in Geo. So what is equity, debt to equity ratio? How it is structured, how it is financed, or what are the type of investment it is making? All this you are going to assess the nature of the entity. Nature of the entity by doing what? Ownership, operations, the way the entity makes investment, and how it is financed, how it is being financed, the finance structure, debt to equity ratio. And then you will see what is the selection and application of accounting policies, any reason for any change. So they should have adopted FIFO, but they have resorted to weighted average. Then they have changed it to again to FIFO. Then is there any reason for such change in accounting policy? What is, how have they selected, how have they applied the accounting policy? Suppose they have applied or selected wrong, they have selected LIFO, which is not allowed, then that is wrong only, right? We will assess inherent risk as a lot. However, they have assessed FIFO, they have assessed FIFO correctly, they have selected correctly, but they have not applied correctly. So selection and application, both selection of correct accounting policy and application of accounting policy, including the reasons for changes and entities objectives and strategies. What is the objective of the entity? What are the strategies which are being employed by the entity, by Geo, and measurement and review of their financial performance. So just go through this once again. You have to recollect all the 5 points later when I ask you. Zero tolerance. So remember, there is a test on Wednesday. Yeah, essay 300 series is also be included in the test. Okay, one or two question will also be from essay 2 300 series. So essay 300 series is not large like essay 200. It's small only. Uh, we did essay 300 in like 20 minutes, right? Essay 315 is important, so do that accordingly. Essay 315 specifically, and 320. 315 and 320 is very, very important.
So
So once,
test is on standards only, na?
yeah, yeah, on essay 200 series, on essay 300 series, and SQC 1 on Wednesday. ठीक है? Now, after identifying, I mean, after understanding the entity and its environment, we are able to assess what inherent risk. So now we will see entities' internal control. Obtain an understanding of the internal control. Are they able to mitigate this inherent risk? Are they able to mitigate this inherent risk? Or the control risk are still there? So see, generally misstatements, if suppose if there are 100 items in a financial statement, okay, for example, let's suppose an example of take an easy example of 100 items. Now suppose inherent risk is 40%. Inherent risk is 40%. So if at all there is no internal control, inherent risk is what? Means what? Without considering internal control, there are no controls, then how much misstatements will be there? So what do you think, if there are no internal controls, how much misstatements will be there? Out of 100 items of a financial statement, there would be what? MMS of material misstatement of 40 items, yes or no? Now suppose out of 40 there is a control that we have implemented to reduce this 40 to lowest number. To reduce this 40 to lowest, we have implemented internal controls. However, due to inherent limitation of internal controls, not all misstatements can be identified, right? So control risk, or I can say the controls, internal controls that we have implemented could reduce the risk by, suppose, say 70% or 75%, could reduce the risk by 75%. So tell me now, how many misstatements, material misstatements are remaining? Did you get all the, did you all get the question?
10.
10 is remaining. Yes, everyone else? If after employing of the internal controls, we are able to reduce the material misstatements by 75%, that means what? Control risk is how much? Control risk is how much?
For remaining 25%, sir.
Control risk is 25%, right? Yes or no, everyone? Control risk is 25%. That means what? Out of 40 items, 25% will not be detected by the internal controls. 25% of the items will not be able to be detected and corrected by the internal controls. That means what? We are still left with material misstatement of 10 items. Yes or no, everyone till now? Any doubt? Correct. Now auditor will apply his detection risk. Auditor will apply his detection risk, and suppose auditor is able to reduce the material misstatements by 7%. Auditor will apply his audit procedure to add further audit procedure, and if suppose he is able to reduce the material misstatements by 70%, if he is able to reduce the risk by 70%, or if he is able to reduce the material misstatements by 70%, now how much misstatements do you think will be remaining with, even after auditor's procedure? Yeah, did you
3.
get the question? 3, right? Nikita said 3, Rupali 3. So overall we can say is what? Our audit risk is 3. Yes or no? Our audit risk is what? The risk that there could be a misstatement in the financial statement but which may not be detected. There was a 40 misstatements initially, inherently. However, in internal controls, because of internal controls, 30 misstatements were identified and corrected. We are left with how much? 10 material misstatements. Out of 10, auditor was able to detect 70% of these 10 material misstatements. That means what? Detection risk is how much? Detection risk is 30%. 30% of the 10, that is 3 material misstatement we will be left with, and that is what we call as audit risk. Audit risk is what? Inherent risk into control risk into detection risk. That means what? Inherent risk is how much? Inherent risk was how much? 40%. Then control risk was how much? 25%. And detection risk? Detection risk
30%.
30.
30%, right? So how much are we left with? Audit risk of 3%. If I ask you to calculate ROMM, then what is ROMM? I told you, inherent risk into control risk. Yes or no? So ROMM will be how much? Risk of material misstatement, that is without applying the audit procedure. How much is the ROMM?
10%.
10%.
10%, right? So that is what in the internal controls, what we have to assess here is control risk. That controls are implemented, but are they operating effectively, or are they adequate enough to mitigate the risk? Here they were 75% effective, but 25% not adequate enough to mitigate the inherent risk, to mitigate the 40 items of inherent risk, to reduce it to zero. They were effective only 75%, right? 25% they won't be able to mitigate. That means inadequate internal controls, and that shows your control risk of 25%. Now I told you about control environment. You can just give a reading: culture of honesty, appropriate foundation for other components of internal control. I told you control environment is the brain of internal control. Out of all the components, control environment is the foremost, is the very important internal control component, because it sets the tone of the entity. Sets the tone of the entity. Are you getting it? Sets the tone how the entity is going to go forward. Integrity, honesty, culture, what, how will it be there, everything. If you want to write this example, you can write, because this example I'll anyway will again come out with in essay 315 in chapter 3. So this is an important example which has also been asked by RTP, by institute in the RTP. If you want to write, you can write here or in essay 315 in front of essay 315.
Supplemental, but
Sir, can you? Okay.
Yeah,
Sir,
can
this
I?
figure example, right? You have shown there.
This example, this 40.
Ah,
So out of 100 items financial statement, 40% is the inherent risk, you can say. You can just start writing. I am dictating. 40% is the inherent risk. Therefore, material misstatement without considering internal controls. Material misstatements, material MMS without considering internal controls, or without any internal controls, will be 40 items. Now, out of these 40 items, we implemented internal controls. We implemented internal controls, but they were 75% effective. Therefore, this means control risk equals to 25%. That means internal controls will still not be able to detect 25% of the material misstatements. How much was the material misstatements? 40. That means you can, after writing control risk is 25%, that means internal controls will not be able to detect 25% of the material misstatements. Internal controls will not be able to detect 25% of the material misstatements, bracket 40 items. Bracket 40 items. MMS were how much? 40 items na? Before internal controls were implemented. So control risk controls will not be able to detect 25% of the material misstatement. After material misstatement, you can just write bracket 40 items. That means we are left with 10 MMS, 10 items as MMS. We are left with 10 items in the financial statement as material misstatement. Now auditor applies his further audit procedures and is able to detect 70% of the remaining MMS. Is able to detect 70% of the remaining MMS. Therefore, detection risk equals to 30%. Detection risk equals to 30%. Therefore, we are left with, even after applying audit procedure by the auditor, we are left with 3 items in the financial statements as MMS. That means audit risk equals to 3%. Audit risk equals to 3 by 100. 3 by 100. That is 3%. 3 items divided by 100 items in the financial statements. That is 3%. Audit risk is 3%. You can quote this formula also. Audit risk equals to IR into CR into DR. Similarly, ROMM equals to IR into CR. Yeah, so read this as homework. Let's now jump to information system including related business process relevant to financial reporting and communication. So this also we will deal with chapter 3, or wait, we can do right now. I'll ask again in chapter 3. So pay attention, I'll be asking this in chapter when we arrive at chapter 3. Hmm. So information system including related business process relevant to financial reporting and communication. I told you one of the component of internal control was information system also relating to IT. You can deal it with or relate it to IT. So in the internal control, since everything is automated, IT has a big role to play. And for that matter, information system, the system that is there, it should be able to implement the controls, right? So auditor has to obtain an understanding of the following areas to see the information system including their relevant business processes relevant to financial reporting and communication. That means we want to see whether our information system is able to report financially whatever transaction we are taking, whether it is able to financially report, financial reporting is done accordingly or not. So we'll see and understand the class of transactions. First of all, class of transaction, what are class of transaction? Either it can be account balance, either it can be a presentation and disclosure, or either it can be a class of transaction. So class of transaction, sorry, I was telling you what assertions are either account balance, or either it could be presentation and disclosure, or it could be class of transaction. So account balance generally leads to balance sheet items, presentation and disclosure generally leads to notes to account, and class of transaction generally leads to profit and loss item. So revenue that you have generated during the year, that is what class of transaction, right? So we'll have to understand class of transactions. What procedures are there with both IT and manual system? What is the procedure by which the transaction that you undertake, this transaction, how are they initiated, how are they conducted, how are they activated, how are they reflected in the financial statement, how are they reported. So initiated, recorded, processed, reported, everything is it done through IT system or be it manual, what doesn't matter, but we need to know about these areas. Please try to understand the procedures. What is the procedure? Either it could be IT dominated or it could be manual also, but you have to understand the procedure, how the transaction is initiated, transaction is then processed, recorded, and then ultimately reported in the financial statement. Then you have to see the related accounting records of the entity, how the information system captures any events or conditions. That means, can you think of an example for point number 4? How the information system captures any events and condition other than transaction. That means it is not a transaction, but our information system, our SAP or any sort of accounting software or any software that you think of is able to capture events or condition which is not a transaction, but it's still able to capture the events or certain conditions that are significant to the financial statement, significant to FS. That means what we are talking about, financial statement item which is not a transaction but is an event or condition and which is captured by the information system. Can you think of any example?
So any budget plan in the system or any statistical report.
Budget plan, if you say, is not a, anything might be not be reported in FS, or even if it is reported, it might not be that conditions, or generally you can say it's not reported, right? Budgets are for internal reportings, internal processes. I'm talking
So
about which is
contract
significant to the
is also
financial
reported,
statement.
like in contract for
Contract, is it captured by the information system?
yes, and in SAP it is done in
Hmm.
SAP through contact.
That
Yeah,
could be
and
a example, but more or less, yeah, that is also significant also to the financial statement. This can be one example for events or certain conditions other than transaction that is information system is able to capture or not. But if I suppose I want to tell you that it should automatically capture, is it able to capture it automatically? Any that any sort of event that you can think of, where is it able to capture that event which is not a transaction and accordingly report significantly, it is significant to the financial statement as well. Right? Depreciation, once done with all the entries of the fixed assets or any sort of asset, then depreciation is an event or condition. It's not a transaction, right? It's not a transaction, it's an event or condition that is on occurrence of an year or on occurrence of any single period. Depreciation is automatically captured by the information system, right? So is our system capable enough to do this? That is what we are trying to assess here. And then the financial reporting process, and lastly controls surrounding the journal entries. These are what any adjustment entries that you do in the last moment, or any closing entries or adjustment entries with respect to those controls are there or not in the in your information system or SAP. So are you able to get all the points? Yes, Dhanlakshmi, welcome. Did you went? Did you go for a short nap? Yes, clear with this point. This I'll ask you. This I'll ask you in chapter 3 again. So please be thorough with all the points, 6 points. These are the same points that you will again encounter in some of the other answer. I'll be asking you, you should be able to answer at that point. Any doubt here? Yes. Any doubt, anyone?
Yes.
So identifying and assessing the ROMM. Come on to this. Identifying and assessing the risk of material misstatement. So where will you find this ROMM? In the financial statement, right? FS. Financial statement level as a whole. That means what? In all the financial statements. Or you could find in certain class of transaction, account balance, or disclosure level. That means what? You can find this at the assertion level. Assertion. What do you mean by assertion? Assertion level. And why have we bifurcated this into three? Account balance and disclosure and class of transaction. Just now I told you CT, COT. Class of transaction means what? P&L items. Account balance will be what? Balance sheet item. Disclosure will be what? Notes to accounts item. So these are what? Assertions. We have divided this into P&L item, balance sheet item, notes to account items. CTABD. Now onwards we will call it as what? CTABD. Class of transaction. AB for account balance and D for disclosure level. So what do you mean by assertions? बोलो भाई.
Explanation or statement, like
Explanation of statement.
assertions.
Assertion. Or I could simply ask you, what do you mean by assert? What do you mean by assert?
Assumptions.
No. Assert means to say it. I am asserting this fact upon you. To say it, to confirm it, right? So assertion would be like, if at all balance sheet there is a cash mentioned 1.3 cr. Debtors mentioned 28 cr. That means what? Management is asserting to you that yes, this debtors rights and
Like notes to
obligation.
accounts.
Yeah.
Like notes to accounts, explanations.
Notes to account, it's not like I'm trying to say is assertions are like what? Assertions are like rights and obligations. These are assertions, rights and obligations. Similarly, you can say existence. I'm telling you about balance sheet item. Then valuation, completeness. These are all my assertions for balance sheet item, or for I can say account balance level pay. At account balance level, these are my assertions. So what does management wants to assert? If they are writing debtors in the balance sheet of 2.28 cr, they are asserting that yes, these debtors are us. These debtors are our rights, our obligations. our rights. These debtors owe to us. Similarly, yeah, these debtors actually exist. Not just in books, they have actually they exist in actual. Dawa karna, right, Kapil, right. Then similarly, valuation, whatever valuation you are saying at 2.28 crore, yes, they are at 2.28 crore. Actual valuation is at 2.28 crore, and we are also saying that we have recorded all debtors completely. These are our assertions. Correct, getting it? So it could be at assertion level or it could be at FS level. Auditor has to identify ROMM either at the FS level or at the assertion level. So at the financial statement level, you can refer to the ROMM that relate more pervasively to the financial statement as a whole and potentially affect many industries, many assertions. So when we are saying that assertions are affect or not, ROMM is at financial statement as a whole, we actually want to say what? That they are affecting balance sheet also, they are affecting financial statement in a sense, profit and loss also, and then also notes. Overall, we are saying that financial statement as a whole is affected, and therefore we are saying that ROMM is at financial statement level, and that is why they are saying that financial statement as a whole and potentially affect many assertions. That is AB, CT, D, CT, ABD, all three assertions are affected. And risk at the FS level may derive in particular from where? What can you think of that? Because of this, the ROMM, from where can you source this ROMM that is affecting FS as a whole? That means what? Entire financial statement is seems to be materially misstated. So where do you think? From where can this ROMM be sourced? Because there might be a case where management is not integral, integrity of management is not there, integrity of books of account, manipulation of books of account, deficient control environment. If I told you, if the control environment is deficient, the entire internal control, all other components also might become deficient. Indicators of significant deficiency, remember, indicators of significant deficiency, first point was ineffective control environment. Similarly, declining economic condition, the condition of the company, the condition of the economy, or the condition of the industry is not good. For example, deficiencies such as management, lack of competence. I told you management is not integral enough, integrity of management is not there. These all have a more pervasive effect in the financial statement as a whole. Pervasive means affecting the entire financial statement, and therefore this I could say ROMM are sourcing from where? Are sourced from integrity of the management or competency of the management, deficient control environment, and similarly declining economic condition of the entity or industry, whatever. Are you getting it or not, everyone? At the financial statement level, yes, any doubt? Now similarly, you can see at the assertion level also, we'll have to understand the ROMM arising at the assertion level so that we can decide our further audit procedure. Why do we have to decide on the ROMM at assertion level? The assertion level, ROMM at the assertion level for CTABDs need to be considered because such consideration directly assists us in determining the NTE of FAP. In determining the NTE of FAP. So are you able to link this? That if suppose I found any ROMM at account balance sheet level, then I'll supposedly determine my FAP more. FAP will increase more for balance sheet items. Are you getting this? So in order for me to determine the NTE of FAP, I'll have to assess the ROMM at assertion level. Now here it says to provide a basis for designing and performing further audit procedures. For this purpose, what will the auditor do? If the question comes, for you to derive at a basis for designing and performing any FAP, how will you derive or design any or perform FAP, further audit procedures? Now what was I saying? This is what risk assessment process is. Your risk assessment process. So what do you do in your risk assessment process? You provide a basis for designing and performing your further audit procedures. And for doing so, what will you do for designing and performing your further audit procedure? What will you do? You will identify risks throughout the process of obtaining an understanding of the entity. That is when you were doing what? Risk assessment procedure. when you were doing risk assessment procedure. That is why I called this as what? Risk assessment process. So RAP, FAP, right? These are the two procedures of the auditors. So for determining how you should perform your FAP, you will derive the ROMM from here only, right? You will decide the ROMM at RAP level, and accordingly, based on your professional judgment and based on materiality, you will derive your further audit procedure. So for that, you have to do what? Risk assessment process accordingly. And therefore, the first point it says is you have to identify the risk throughout the process of understanding the entity, its environment. Whenever you're understanding the entity, its environment, including its relevant control, that means what? Inherent risk, control risk. They are talking about inherent risk and control risk, ROMM. Sorry. Inherent risk and control risk. You have to identify risk. This risk you can call it as ROMM. Now you have to assess the ROMM and evaluate whether they are pervasively affecting the financial statement as a whole. That is what we studied here. Whether they are affecting financial statement as a whole or at the assertion level. Link everything. After identification, we have to evaluate whether they are affecting financial statement as a whole. That is the pervasiveness of the material misstatements. How much is the pervasiveness? And if not, relate that if the risk is affecting the any assertion level. Let's suppose if not, it is not affecting the financial statement as a whole, then is it affecting any assertion level? If not financial statement level, that is it affecting any assertion level? That's to what can go wrong at the assertion level. What can go wrong? And lastly, you will then also assume the likelihood, probability of actually happening of this ROMM. This ROMM actually realizing this. Then you need to also assess the probability of realization of the ROMM or actual realization of the ROMM or this ROMM to actually happen. Risk of material misstatement, the likelihood of misstatement, including the possibility of multiple misstatements. Are we clear? What will be the question? How are you going to decide on the basis of what is your basis for designing and performing the further audit procedure? So I'll be deciding or designing and performing a further audit procedure. I'll be deciding based on the risk assessment process. That will include what? I'll first of all identify the ROMM by understanding the entity and its environment. Then I'll assess this ROMM and after assessing the ROMM, I'll see and evaluate whether these are so pervasive that they will affect the FS as a whole. And if it is not that much pervasive, but still I will like to check what, if at all, what can go wrong at the assertion level. Assertion level पे क्या गलत जा सकता है? If not at the financial statement level. And lastly, I will check the probability of actually happening of this ROMM. Likelihood of happening of this ROMM including possible misstatement. Likelihood of happening of this misstatement including possibility of multiple misstatements. Clear? Yes, everyone clear till now? Mark this question also as important. Just try to remember the framing. Framing was this. More than the answer, the framing of the question to provide a basis for designing and performing further audit procedure. Or they can ask you risk assessment process. So this is actually the risk assessment process, right? I am identifying the risk, evaluating the risk, assessing the risk, and considering the likelihood of actually happening of this risk. Yes, anyone, any doubt? Then Lakshmi.
No, sir.
Now come to risk that requires special audit consideration. Risk that requires special audit consideration. What do you mean by this? Yeah. What do you mean by this? The risk that requires special audit consideration. Yes, anyone?
Require more resources and timing.
Condition that require more resources, more audit procedures needs to be
Audit
performed.
procedures and resources, yes.
So when will you think that this can happen is when the risks are very important or significant risks are there. So the risk relates to, for example, related party transaction, or suppose fraud transactions are happening. Fraud risk. You are able to identify any fraudulent risk, risk of fraud, or the risk relates to related party, or the risk relates to account estimate balance, the provisioning. There is a risk in provisioning as well, right? So I told you yesterday that there could be a case where instead of 2% I took assumption of 5% pfdd. So there could be a risk in there as well in the account estimate balance. So all this risk requires special audit consideration. It's not the normal audit procedure that you will follow. In the risk of fraud, here in all these risks, which are significant risks, they can also ask you the risks, what all risks are significant risks. Two ways they can ask you. They can ask you the risks, those are significant risks. Similarly, the risks that require special audit consideration. So the risk, those are significant risks. Those risks only require what? Special audit consideration, which is not normal. Special procedures. So judgment as to which risks are significant risks, the auditor shall consider the following. Whether the risk is a risk of fraud, that means what? I told you that whether a fraudulent transaction can happen, risk of fraud, then that requires special audit consideration. Similarly, whether the risk is related to recent significant economic, accounting, or other developments. Suppose example, as I told you yesterday, only for banks, they will be dealing with now staging provisions. That means earlier they were calling or recording GNPAs, NNPAs. Now they will be recording stage 1 assets, stage 2 assets, stage 3 assets. And stage 3 assets are particularly non-performing loans, NPA, non-performing assets. So there is a change in accounting environment, right? They will be held accountable now as per India's. India's will be made applicable to them. Till now there is deferment for the India's applicability to banks. But now RBI is proposing to implement it from the next year, FY24 onwards. So there can be a change in economic environment, there can be a change in accounting environment, or any other developments that might indicate you that yes, this is a risk which according to me is a significant risk, and that should be, I should deploy some special audit consideration. Similarly, complexity of the transaction, it's a lot complex transaction. Yesterday I told you I paid to Nupur, then Nupur paid to Sagar made an entity. Pooja was the shareholder in that entity, then Pooja again is the relative of Nikita is relative of Kapil is somewhat paying the same amount to me. That is how a complex transaction is created within the closed environment. Similarly, the risk involves significant transaction with related party. I told you, if at all the related parties are involved, then definitely the risk requires special audit consideration. These are significant risks if it's a related party transaction risk. Then degree of subjectivity in the measurement of financial information. I told you, for example, degree of subjectivity. Most subjectivity will be involved in where? Provisioning, right? Account estimate balance. Are you getting this? Subjectivity is involved a lot. Then definitely that risk is there. Significant risk. And whether the risk involves significant unusual transaction. Suppose you started trading on cryptos. So that's an unusual transaction. Then that's a risk, significant risk that requires special audit consideration. So this is a very, very important, frequently asked, very, very important. Let's try to understand how we can learn this. So it was very unusual for me that my related party, that my kid, suppose my kid knows CDEF, but he does not know ABCD. He does not know ABCDEFGHIJK. He knows from CDEF. So he knows CDEF. He does not know ABCD. He knows CDEF, and it's very unusual that my related party knows CDEF but not ABCD. So let's see what is C. C for complexity of the transaction. D. D is for degree of subjectivity. E is for economic developments, any economic changes, economic developments within the entity or within the industry or within the operating environment it operates, economic developments. F is for fraud risk. F is for fraud risk. And then unusual. Unusual say, you already know, any unusual transaction like crypto and related parties obviously what transaction with related parties. I hope everyone is clear with all the 6 points and also able to learn the same. Please learn this right now. I don't want you to forget any single point out of this question because this is very important, frequently asked question. CDEF, what was very unusual that my related party knew CDEF instead of ABCD. You can also see the question. Yeah, done. Now come to fourth and fifth point. So I remember I told you under further audit procedure we have what? Compliance procedure, which we call as what? Test of controls. And one is what?
Test of details, substantive.
Substantive audit procedure. And under substantive audit procedure we have test of details of transaction or analytical procedure, right? So here they are saying that risk for which substantive procedure alone do not provide psi. That means even if you are completely 100% doing TOD, you won't be able to, of course, obviously you won't be able to do 100% of TOD. That is why they are saying that sufficient appropriate substantive procedure will not be in a standalone basis be sufficient. That is, substantive procedure alone will not be sufficient. That means what? You will not be able to do the TOD completely, or analytical procedure will also not be providing with you that reasonable assurance. You will have to resort to TOC, or you will have to combine both TOC and substantive audit procedure, both. When do you think this can be the case? When you are not able to do the TOD in detail test of details in test of details of transaction in detail of transaction test, you are not able to do. When do you think can happen? Under what circumstances? हाँ, बोलो. अच्छा, tell me, is it like Reliance Smart? Do you think can this happen, or your बाजू वाला किराना show? Where do you think this will happen? Where TOD is not able to provide with you sufficient appropriate audit evidence. TOD alone is not sufficient. Where do you think? Reliance Smart or provision normal provision store?
So Reliance maybe.
And smart.
Why do you think so?
So
Because of
because
Complexity, like so many
transactions are large in
because of
number.
volume,
many
right?
deep process. Yes,
Volume
volume.
at which they are operating.
Operating.
Here you can, even though if I say yes, you can without any test of control straight away start with all the invoices, all the vouchers, verification, straight away do all the test of details of transaction. Even then you might be able to give certain reasonable assurance in the case of normal provisional store. But in Reliance Smart, will you be able to do that? No. So many invoices, so many transactions. There you have to resort to what? Test of controls. You'll have to check the controls, the automatic cash register, invoice building, their system, whether their system is operating effectively or not, the automated system. If they are operating effectively, then yes, we can arrive at a conclusion that yes, the other transactions are are okay, right? With that we can arrive at a sufficient appropriate audit evidence has been obtained. That means what? These are certain risks. Such risks may relate to the inaccurate or incomplete recording of routine and significant COT or AB, the characteristics of which often permit important highly automated processing with little or no manual intervention. With little or no manual intervention means what? Are you getting this? This pertains to Reliance Smart, where the volume of transaction is so, that means we are permitting highly automated processing with little or no manual intervention. In those cases, TOD might not be able to generate sufficient appropriate audit evidence. You might not be able to perform TOD 100%, right? And similarly, in such cases, the entity's controls over such risk are relevant. That means what? We have to resort to TOC, test of controls, more importantly, as compared to TOD, or maybe combination of TOD and TOC. Clear? Yes or no? And if at all there is a revision of in the risk assessment, then during the course of audit, suppose you obtain certain audit evidence, suppose you, after deciding that you have done the test of controls, now you resort to test of details. Now after verifying each and every invoice, you got certain audit evidence which tells you now that no, the controls that I determined that to be that much effective are not actually that much effective. The controls which I suppose are effective based on my TOC test are not actually that much effective. So because of that, I am changing my risk assessment. Now since I'm changing my risk assessment, that will that will lead to change in the risk assessment procedure, and that can also lead to change in the further audit procedure. The extent of the procedures that you perform, nature, timing, and extent of procedure that you will perform. So that is what they are saying. The auditor's assessment of ROMM at assertion level may change during the course of audit. As additional audit evidence is obtained throughout the course of audit, the auditor shall revise the assessment and modify the further planned audit procedures accordingly. So you'll have to then accordingly modify your FAP also. If you're revising your RAP, then definitely the RAP will revise, because the RAP will revise, the ROMM will now be new. Because of new ROMM, decreased or increased, whatever be your FAP will increase or decrease accordingly. Yes or no? Based on your professional judgment, you will now increase or decrease your further audit procedures. Last two questions. Please pay attention. If you want to just give it a reading, these 2 points, you can give it a reading again right now. And if at all any doubt, you can ask me right now. Specifically give this a reading again and try to recollect all these points, A, B, C, D, E, F. If ROMM is less because of changes in risk assessment, then your further audit procedure will also reduce, because now you are able to assume higher detection risk. So if you can assume higher detection risk, then you need not perform that much further audit procedures. Similarly, if ROMM is because of change in assessment increase, then your further audit procedure also needs to be increased. Clear, everyone? Areas to be examined for deficiencies and risk identification in CIS environment. CIS environment means automated environment. CIS, computerized information system. Computerized information system environment. That means what how are you gonna now examine for deficiencies and any risk in the CIS environment? So what all areas you will look for? Are you getting the question? The question will be framed in a manner which will depict this line only. And I am pretty much sure the next time I'll ask the question, you will be either giving me this answer or you will be giving me about any other answer. You will get confused. So the question line is very, very important. What are they asking? What all areas you will look for what? For the purpose of risk identification, for the purpose of identification of deficiencies, examination of deficiencies in a CIS environment. Clear? So we look whether the program development and maintenance, who is actually being involved. So suppose I am the entity and now I want my SAP. So whether we are developing the SAP ourselves, or suppose any other software, suppose designing software. L&T, I remember, I don't know if I told you or not, in L&T they had their joint venture with Sargent and Lundi. So that was that we used to call what joint venture entity as LTSL. Now LTSL has a software which for 6 months they used to pay pay 2 crores for 6 months. That is for yearly they used to pay 4 crore fees. So every 6 months it used to be renewed, and every 6 months they used to pay 2 crore. Now they have developed this designing software from someone else. So you have to decide now, determine whether the development of the product either you have developed or in-house development, or you have purchased it, and who is going to maintain this software, maintenance of the software, maintenance of the program, maintenance of the software. Now secondly, system software support. Now who is going to give you the support, any other support that you might require. So all these areas you have to look for, if at all there is any deficiency or risk identified points that you need to look for CIS environment. Right, then operations including processing of data. How is your data processed? Whether the input that is feeded, the output is according to the input or not. The input is feeded and the processing is wrong, then definitely output will be wrong. Yes, right or not? The input, whatever input is being fed, the output should be according to that input, and for that matter the processing should be correct, processing of data. Similarly, any physical CIS security and any controls over access to specialized CIS utility programs. So who all have the access to all these programs, whether there is or not any SOD or not, there should be segregation of duty. Everyone, there should be segregation in access as well. Not everyone can have the access to this specialized CIS utility program, specialized CIS utility program. So these all points we need to remember. So you can simply remember this through PD. PD means what? Pen drive. So someone is selling the pen drive, and they are also saying that there is a special software support also, that will also be providing with you software support, plus we will be also supporting with you physical security. If at all your pen drive gets break or broken, then we'll be also providing you the replaced pen drive. So physical security is also there, software support is also there, and specialized utility program, if there are there, if at all there is, then we will also provide with you specialized CIS utility program. So PD means what? Processing of data and program development. Program development, processing of data. Processing of data, program development. Program development, processing of data, and then software support. So supports processing of software support, physical CIS security, and then lastly access to specialized CIS utility program. Very, very important answer, frequently asked question. This is for 4 marks, for 5 marks. If you write this much points only, na, you get full out of full. Yes, clear everyone? Yes, Nikita, tell me, risk that require special audit consideration. Risk that require special audit consideration. Nikita.
So, unusual transactions with related party, complete and complexity of transaction may be of your head.
So I can listen to Three Idiots movie. You need to increase your volume. You're watching my lecture or watching movie? 3 Idiots. Sunday.
Sir, the sound is coming from another room.
Huh?
It's coming from another room. I can't.
Okay. Yeah, tell me the answer.
The unusual transactions with related party, complexity of transaction, and F, fraud,
Risk of
risk of
fraud.
fraud,
Whether the risk involves risk of fraud.
and then the degree of subjectivity of in the transaction. If there
And I gave you an example of banks. Instead of
economic
GNPA,
and accounting environment
is there any
significant
new
change in
development? Yeah, new development in economic accounting or regulatory environment. Risk to internal controls imposed by IT. So how are you managing, Nikita, then with the movie or lecture? Huh? Are you not getting disturbed or you're enjoying both? कैसे कर रहे हो?
using headphones. I can't listen to that much, maybe because of that I'm using the mic to speak. It's more audible.
ठीक है. Last question, essay 315. Risk to internal control imposed by IT. Now again you will get confused this with above answer. Now this question wants you to tell what are the risks to internal controls because of IT, because of IT. And above they wanted to ask what areas you will look into so that you can identify the risk in a CIS environment, in an IT environment, CIS environment, what areas you will need to look into. And here they are telling you what are the risks to internal controls imposed by IT. So ideally you can learn this first, and due to this risk which are there in the internal control because of IT, how will you look, what areas you will look, then you can go above. Areas here, mark important word is here is areas that to be need to be examined, areas to be examined. And here is what risk because imposed by IT. So I'm paying special attention because I know whenever I ask in subsequent revision, students generally confuse with the two answer, mix up. So pay special attention. Risk to internal control imposed by IT. Imposed by IT. So first is because of IT. Suppose you are either inaccurately processing the data. That means what? Your processing is not correct. Your processing is not correct. Or it could happen that you are processing correctly, but the input is not correct. You are processing the inaccurate data. The data is inaccurate, and if you are processing inaccurate data, definitely the output will be wrong. But even if the input is correct, the data is correct, but the processing is inaccurate. Inaccurate processing data, processing inaccurate data. Are you enjoying this by saying that inaccurating processing data, processing inaccurate data? The first point should be dealt, you should be able to recall with the enjoyment part. Processing inaccurate data, inaccurately processing data. Have you seen this movie Rajnikant wala, Shivaji the boss? Processing inaccurate data, inaccurately processing data. ठीक है. Secondly, unauthorized access to data that may result in destruction of data. Unauthorized access. So I told you in LNT, I will tell you what happened at the time I joined. There used to happen an access audit. Access audit. That means what? The person who should have got the access, if at all access is been granted to more than the users which is permitted. So Deloitte was appointed for doing the access grantation audit, and there they evaluated and pointed out that for this system, these many persons, these many users are in a, are should not have given the access. Similarly, for these many system, these users should not have been given the access, and then their rectification will be done. So access is very very important, and if at all there is unauthorized access to any data, which may result into destruction of data, or which may result to changes in the data, right? Recording of unauthorized data or non-existing transaction, you will tend to then record inaccurate transaction, inaccurate data, inaccurate recording of transaction. Particularly, risk may arise when multiple users access a common database, right? So second one is with respect to, second point is with respect to access, data access. Then third is with respect to, if you gain unauthorized access, then the possibility of IT personnel gaining access beyond those necessary to perform their assigned duties, thereby breaking down SOD. That means what, third point is related to second point only. Because you are getting access beyond what is required, because you are getting access beyond what is required, then definitely this will lead to what, break of SOD, break of SOD. That means there will be no more SOD. Segregation of duty will not be there. You will also be having access, I will also be having access. In order for us to implement the SOD properly, we need to differentiate the access. That means what, you will have the access to SAP with respect to trade payables, then you will not have access to cash ledger or cash book. You will not have access to that. Then that is how we segregate the duties, right? By segregating the access. But if at all you are able to gain access beyond what is required, then there will be break in SOD also. Are you getting this, the implication of getting your access beyond what is required? Then the SOD is not no more implemented. Similarly, there will be unauthorized changes to data and unauthorized changes to system or program. 2 points with respect to unauthorized changes: unauthorized access to data, unauthorized changes to data, unauthorized changes to systems or programs. And last 3 points are very easy: failure to make necessary changes to system or program, and inappropriate manual intervention. So we are here by IT, we are assessing the IT, we see what, that the system is automated. But if the system is automated, then the error should be least, the error should not be there. But the error occurs in the in automated system only when there is a manual intervention in between, right? Else how will the error occur? So there is an or error because of manual intervention, so there should not be any inappropriate manual intervention. Wherever interpretation or intervention is required, then of course that is okay, but inappropriate manual intervention should not be there. That is a risk which is imposed by IT in the internal controls. And then definitely you can be subjected or suspected to potential loss of data or inability to access those data which you have lost. So last 3 points you can learn by this. Do you remember, like, MI failed to make necessary changes? Similar to what you can say is like Nokia failed to make necessary changes, जिससे उनका डेटा लॉस हो गया, जिससे बहुत ज़्यादा लॉस हो गया उनको. They incurred a lot of losses and now they are not able to get access to the markets again. So similarly, MI also failed to make the necessary changes, because of which they incurred a lot of data loss, and now they are no more able to get access to the data. So MI is manual intervention. MI is manual intervention. They fail to make the necessary changes. They fail to make the necessary changes, and because of which they lot of loss has been there in data, and they are also not being able to access the data as required. So last 3 points you can just, if at all you require, you can just mug up through this trick, and other points are similar. The first point I told you, you will try to recall it's what.
So not audible.
I was telling how are you going to recall all the points. The first point was what, processing inaccurate data or inaccurately processing data. Second was unauthorized changes to data or unauthorized changes to system or procedure. Similarly, one was with respect to unauthorized access, because of which you can now make improper changes, unauthorized changes, you can destruct the data, recording of unauthorized transaction. And because of this access which you have gained beyond what is required, there would be a breakdown of SOD. And lastly, that storyline, MI failed to make the necessary changes, and therefore they incurred a loss of data, and also they are no more able to get the access back. So fail to make necessary changes, MI say manual intervention, and potential loss of data or inability to access data as may be required. Yes, clear. So do you want a lunch break? I want.
Yes, sir.
सर ब्रेक है कि आज यहीं खत्म करना है?
We are running behind the schedule actually. Fine, 3-4 days will be delayed. ठीक है? Okay, everyone is saying class over करो.
सर हर संडे 40-45 मिनट्स से संडे मतलब वीकेंड्स अपन एक्स्ट्रा नहीं कर सकते क्या? मतलब जैसे अगर फॉर एग्जांपल 3-3.5 घंटा अगर वीकेंड में लेते हैं तो उसको 4.5 घंटा कर सकते हैं जितने भी वीकेंड आएंगे.
Again, that will not be sufficient because I am also taking test in between ना. ठीक है, कोई नहीं, 5-7 days it's okay. Let's meet tomorrow then, 7. I'll be also discussing PE test. So anyone not given test till now, last day to give, I'll be discussing tomorrow. ठीक है?
Okay, sir.
And remember, test on Wednesday. Essay 200 series, 300 series, and SQC 1. So start revising accordingly.
So you said only 200 series and SQC one.
No, I told 300 series also again when I think you were not there.